Good morning, guys, and welcome to today's edition of the London Session Open. Today is March 27, 2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX based out of London. We're going to take a look at the markets as we usually do now, and you should be able actually to see my webcam and also my screen, I hope. A combination of that, I guess. So welcome, and we're going to take a look at the markets. But before we start, as always, I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. In fact, about 80% of investors lose money when trading, but with ATFX, it's actually slightly lower, around the 70 mark. Okay, so let's begin, and we're going to begin by, again, sort of taking a look at the markets, and we're not going to begin with the NASDAQ 100, rather we're going to begin with something a bit more boring, like the euro. In the chat box, Nikos is saying hello, so hello to you, sir. Thanks so much for joining us this morning. I hope you're doing well. I'm a bit confused with this GoToMeeting system. There we go. It should only be my screen now. Hopefully you should just be able to see my screen right now. Good morning, Nikos. I hope you're doing well. If you have any questions or anybody else, just put them in the question box and I'll address them as soon as we finish the first part of this presentation. And if you guys are new to ATFX, ATFX is an FCA regulated broker. They have offices in London, Dubai, Hong Kong, and Vietnam, mainland China, and then a few other offices in the Southeast Asia. But the main offices, London, Dubai, and Hong Kong, regulated by the FCA, by Cyprus, and Dubai as well. Okay, let's kick off, and we're going to begin by taking a look at the euro. So there's not much happening here in the euro. Nothing at all, really. The market is going a little bit lower, but there's not a lot of activity here, and there's not too much for us to do here. But in yesterday's technical analysis update, I did an article about it under analysis and technical analysis. You can find that I did a little update on the dollar yen and EURUSD. So if you really want to trade the euro, then maybe the EURUSD is the way forward. Now, this is the EURUSD, it's just a daily chart, a big descending triangle, and the 111.82 level is the level to watch. Difference between trend line and low here gives you this 288 pip target and objective. Could be really interesting. On a break to the downside here, we might see weakness going forward. So this is something you want to potentially check out, especially if stock markets move lower and we'll see higher risk aversion. Right now, though, the market is, it doesn't really know exactly what it wants to do. For now, actually, it looks like it wants to maintain its bullish uptrend. Here's the S&P 500, which, as you can see, is still did not breach my trend defining level and sort of continues to still trade upwards. It may easily just been like a very strong decline here. It took out obviously about 5 days of trading, but for now, this could relatively easily hit its 2018 high. Okay, so for now, markets here are bullish. However, if you look at other markets like Germany, then the market and the trend is bearish. You have you had an uptrend in the German DAX, and you see the price was creating higher and higher lows. But then here on March 22nd, the market slid and took out this low here, and since then the market is bearish. I continue to be bearish as long as you trade below 11,651. That's the trend defining level here. So it's a little bit mixed. European stock market is lower, US stock market is being bullish, euro dollar trading sideways. As for GBPUSD, everybody's just holding their breath. In fact, I don't think nobody's really trading this market because everybody sort of understands that nobody knows at all what's going to happen over the next few days here. So the trend is bullish about 129.52 for now. And again, as I said last week, it is possible to buy here on the idea that this uptrend trend is going to continue to be in play, but we just need to see what happens. Probably Monday morning we'll have some better indication. Unless, of course, before that, Theresa May announces that's going to be an extension to the Brexit sort of transition period. So we don't start Brexit on Friday, rather being delayed with a few months. So the government here can really figure out what it wants to do next. As for the dollar yen, on the back of sort of the S&P 500 turning bearish, copper pricing turning lower, we saw a bit of a decline here in the dollar yen. And as well, the actual move happened already on the 20th. On the 20th of last week, so you might remember, we had the Fed rate meeting. At that Fed rate meeting, the Federal Reserve told us that it's not going to be any rate hikes in 2019 and just one rate hike next year. So what happened here, and it's more clear if you look at this. This is the US 10-year government bond yield. The government bond yield was at 2.63 for a long time, and then here on the 20th, you had a breakdown. Nice little breakdown, market moved down, and the yield advantage diminished. Because what people usually do is that they can borrow, for example, they borrow in Japan for the sake of it at 0%. And then they invest this money, for example, in the US. The difference is 2.38%. So that's the borrow in Japanese yen, and then they put this money in the US. This is what they would make on an annualized basis. But what if they buy with a bit of leverage? They buy with 2 times leverage. Well, then you're looking at the double of this. So you're looking at 5.6% return per year. Obviously with high risk, but that's your return. So every time the yield goes lower, then you tend to see the dollar versus the Japanese yen also go a bit lower here. And then again, you had the situation with stock markets. For now, I continue to be bearish here. I still think dollar yen could go down if some trade below 111, but it's not looking that good. But again, it's too early to give up on this. For now, the trend is bearish below this level. Gold prices, moving more into sort of this little area here where I suspected the price would roll over. It could still be creating some sort of head and shoulders pattern, with the head being the February 20th high, the left shoulder being the January highs, and then this being the right shoulder. But obviously, it's morphing into something different here, and the market is actually not even that interested to trade much lower. If one is committed, as I said before, let's just stick to be committed. It's usually better just to either let the position reach its profit target, or you let the position reach a stop loss. That's usually a good idea most of the time. So I'm going to stick with that. And now, because it looks like the whole view here was sort of wrong, then I'd rather, instead of selling it here, I'd rather just wait for a break to 1297.6. The break here could potentially cause this to trade lower to 1276. This is the price of crude oil. And, crude oil, not much has changed. A few days ago, we said that people probably going to buy on the dip, which they did, trading very close to the high. I think if we take out the high, which could easily happen over the next few days, we could probably be trading at $62 a barrel, maybe 63. So that is really what I'm working with and looking for. I do think we could continue to trade upwards. And I think that's pretty much it. I covered pretty much all the different markets. So we got a question here from Nikos and Marvin. What's my take on GBP New Zealand dollar and GBP Aussie, and as well on the RBNZ? So the RBNZ, I mean, they were clearly bearish, right? I didn't have time though to read into the details, but this is the sort of price action saw. So dovish, and again, I didn't actually read or watch the actual statement yet, but it's very clear from the charts here that it was a dovish statement. Now, the view I've been communicating to you guys is that on a break to this high, I wanted to buy, but we never had that break. So for now, I'm not interested to trade this at all now. It could be, of course, that maybe we'll sort of continue to move lower, but I would need to investigate and see exactly what's being said, and from there see if it makes sense to be more and more bearish and sort of anticipate a rate cut or maybe a steeper declines. So this is what I can say about this right now. Technically, about GBP New Zealand dollar, let's take a look at that one. So this is GBP New Zealand dollar. This is an old setup, by the way. So this is GBP New Zealand dollar. If we look at this, you know, it still has a bit of a bullish bias. The price is creating higher and higher lows, and that sort of suggests that maybe the New Zealand dollar will continue to soften. But there's not a lot of activity here. And I think if we take out something like 1947, then we can probably see this market go a little bit higher. I'm thinking maybe up to these highs here. Actually, let's use a Fibonacci. Then I think that could be better. So these are all the 3 fibs. So I think I will need to add another fib. Let me see here. This is not the correct one. Here we go. Now we got everything in the rainbow's color. Not really what I wanted to see, but what I wanted to show you here is this level here. I don't know if you can see it, but it's 786. 786, that's sort of the next fib level beyond the 3rd fib, which is down here. So maybe up to 19974 on a break here. But I don't, unless the comments from the RBNZ were really, really dovish, I'm not sure if this is going to kickstart a new trend. If it is very dovish, then we might potentially see a very nice CC going trading. But if it isn't, it's probably just going to be very, very choppy, like this setup here. As for GBP Aussie dollar, the market was within this. I mean, it's still technically within this big rectangle. And at one point, I've seen this before actually. This is a big rectangle by itself, and sort of the target. Let's actually draw it from here. This would be sort of the target up here. But what's happening here is that the market is, because the uncertainty is taking a break. And I've seen this before. Just at the level, it sort of creates a new pattern. And if we flip to 6 hour, you can see that we're dealing here with a pattern which is, I wouldn't necessarily call this a rectangle, but it is definitely, the market is oscillating here, right? So again, we can do some similar sort of setups, so like that. So on a break to 1871, we could potentially go up, and then at that point we're probably going to we'll probably head higher. And so this is quite interesting and something I will look into. If that does not happen, like if it just continues to trade like this, then probably just a little break to the downside here, probably gonna take it on lower. By the way, as you guys are here on the feed as well, as you can see, I'm sitting at a different area than before, and it's quite a lot of noise here. So let me know as well if you find it a bit noisy, because we're experimenting here. If either I'm supposed to be sitting here or maybe sitting at the other place as well. Okay, I think that's pretty much it. Again, if you have any comment on the sound levels, let me know if everything was good. Otherwise, I think what we're going to do here is that we're going to wrap things up. We're going to finish up. If you have any questions during the day, just let me know. In the chat, you can actually see my email, alejandro.zambrano@atfx.com. And again, don't forget to check out ATFX. Very, very, very strong product when it comes down to spreads. That's what most people care about. Execution-wise and all of that is also really good. And they're regulated by the FCA here in England, and also CISEC CISEC in Cyprus, of course. Okay, thanks so much for joining me, and I'll see you guys tomorrow, same time here at ATFX. Thank you.